Morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 21st of August 2025. My name is Richard Lee and I made the stockradar.com.au website for you. Well, markets are rolling high. Who would have thought the banks? Who would have thought CSL? Who would have thought James Hardie? Who would have thought AGL? A lot of the stocks we're covering, we've been on the right side of the markets for most of this reporting season. We're going to go through a snapshot of a few stocks for you. Can't cover them all, there's plenty there, plenty of trending stocks there, but we're going to cover a few for you and give you an example of what it is that we do. So this is a comfortable market phase we're in, where you buy the right stocks and they just seem to go up. We love all that sort of stuff, lucky us. But let's not get complacent, but remain vigilant with stops as there are stocks going down, CSL, James Hardie, as well as up, like Linus and ANZ. So there are market phases and they will change, and we've got to be aware of that, okay? So stocks are always rotating through both up and down trends all the time. So we're exiting some, adding some in there as markets move and stocks change. So we still ride the bucking bronco while we can, which is happening at the moment, but we always want to be smart and remain safe. So that's the theme of today, a little bit about, the markets are really good at the moment, we're making lots of money, but we need to be careful because things will happen, things will change, and we need to be alert to those things, recognise them, and be able to change when they occur. Okay, so let's get into the trading centre for start. Here, new highs across all sectors at the moment. There's nothing really particularly standing out as a sector at the moment, apart from the banks, which are gone gangbusters again. But we're going to go have a look at a few stocks here. So across all sectors, stay vigilant, protect your profits, minimise your losses. That's the name of the game. Okay, so firstly, trend intensity ratings. Okay. Medibank Private's bang again. It's had another little rally again. It seems to be an endless one, this one. Good old challenge, a nice steady one, this one there. Linus has gone gangbusters, just booming through there. And you can see the chart there. It's just gone up and up and up. And that's what the miners do sometimes. We're not always on the right side of them, but when we are, we just chase these ones with their stop. And we'll get out at some stage of this stock, and we will make sure we make money, and that's the definite. Metcash, I don't know if you've seen that chart lately, pretty amazing, league-long downtrend, now starting to rally quite nicely, quite sharply, and I think it's probably recovered about half a gain that lost in that big downtrend there, so in pretty quick time. So that's been a beauty. Metcash also used a little bit there. We've got Ventia Services, Sandfire poking its nose above the highs at the moment, looking interesting. Qantas, well, it's a trend. It's one of these things where you just say the trend is your friend, no matter what's going on, whether it's decisions against them, whether it's negative market sentiment against the company itself, but the stock is making money, and that's why it's going up. So that's why people are buying it. And of course, there's 360, which is going well. ANZ and the banks, Westpac, NAB have just gone through the roof. Who would have picked that one? Well, there you go. Interesting one there. And Orica as well in the market, in the mining services business, is also doing pretty well at the moment. So stock picks are actually flat this week at 59 stock picks, but we have 3 new ones in, and we've got 3 we've taken out. So as I said before, always moving in and out of stocks all the time. There's always rotations going on, and as trends change and trends move. So we try and keep on top of that the best way we can. Not perfect, but we play the probabilities of being right more often than not. So that's how we play the game. So that's a trend intensity rating, stock pick count. Portfolios are all full at the moment, doing very well. Now let's go to the overseas markets and see what's happening there. We can't really get too excited about this market. The Dow can't seem to break through that high. It's extraordinary, actually, because the S&P and Nasdaq have gone through there. But that talk about lines with charts. All of a sudden this thing has just stopped there and can't seem to get through for whatever reason. But anyway, it's not too much of a concern. Generally, our market, the ASX 200, is going higher. And again, that's probably been pretty strong. Again, I know we've CSL's come off this week, but then we've got the banks taking their place. So it's actually not doing too badly in the end. But that's the S&P 500, which looks pretty good. New highs, moving higher. We've had a pretty good run up since about April this year. It's been pretty fast and furious. So corrections on the cards at some stage. And Nasdaq's the same situation. So no sign of a correction at the moment, but it's still it will come at some stage. Our market looking very good indeed, behaving pretty well, making new highs there. Some of those top 10 stocks which drive this index. Again, rotation through that one as well. The BHP result was met interestingly. The stock rallied a little bit there, even though the dividend was cut. But I think the sensibility of BHP seems to shine through, and I think people like how the stock's being handled at the moment, unlike CSL. Anyway, that's the ASX 200, which looks okay at the moment. We go across to the commodities. Gold is just faltering a little bit at the highs. No real selling hit it, but it's not really going up at the moment. Copper again was just floundering around at the bottom, sort of trading range down the bottom here at the moment. Nothing really much happening there, and Brent crude as well has been pretty weak. So there on the commodities front, not a lot there. Iron ore's been pretty flat. That's how they're all looking at the moment. But regardless, our market, and again, industrials are probably the sectors which have really been doing pretty well. And we'll have a look at through a few stocks now. We've got stock picks hitting the heights across all sectors. Stocks like, as I said, Linus 360, PEXA, AP Eagers, Origin is doing really well again now. ALQ, I should say. QUB is doing well, and Wesfarmers is doing fantastically. So that's another cross section of good stocks that are booming well, all in our stock pick group at the moment. But now we're going to go through a few stocks that we've looked at over recent weeks. And start off with a bit of a cross section again. Start off with a utility stock called APA, which has had a long downtrend here for quite some time, but finally it's turned the corner here. It's now trend intensity rating of 8, and we can see what's happened here. The downtrend's broken here. We had our switch zone here where we broke down the downtrend line and the average, which gives us a strong indication. And if we're getting volume here as well, the evidence is really starting to build there. So that's what we're looking for. And then we look for price confirmation. In this instance here, we didn't really get it till a bit higher up. But that was okay. We're conservative in most of these situations just to make sure these bottoms are confirmed. Anyway, we've got onto this one now, and it's rallying pretty well, and it's had a very good week this week, finishing up at 876 yesterday. So it's starting to turn the corner. So you can see the trend, downtrend, the accumulation pattern, then the break higher. So we're moving back into that trending phase now. How long it will last? Well, we'll wait and see, but we'll follow this with our stop. But it looks pretty good at the moment. Okay, next stock I want to look at, well, it's Medibank Private. I mean, I've covered this one a lot of times, but really it's a trend is your friend, and you don't sell it just for the sake of selling it, because again, it had a little bit of a falter there for a few weeks. We're bouncing higher out of the gates again. Medibank Private, trend intensity rating of 10. Volume's fine. Momentum's flattened off there, which is steady, but it's very, very high above the zero line, which means the stock is still going up at a steady rate. Okay, so that's a good thing. We're well above the average. You can see some support down there, but really the trend is your friend. The stop is where which is what our decision-making tool is at the moment. So we're just raising our stop, protecting these gains as best we can. As I said at the start of the thing, the name of the game is protect your profits and minimise your losses. And that's, if you can do that, you will do well. So Medibank Private, again, as I said, is a trend is your friend. Follow it, hang on to it, don't sell it. Who knows where it's going to go. When it was $4 here back in just February this year, who would have thought it would have been up above $5.20 now? So the market always surprises us, and that's because we're humans, and that's how we think. Okay, so we've had a very good price breakout there for Medibank Private, and it's run higher very nicely indeed. Okay. Well, I said the banks. I've got to show at least one of these banks here. And now Westpac is one that we followed. It had a huge downtrend there, really from 2015-16, long big downtrend here. Then we saw it change direction down the bottom down here. It made a higher low, a constructive long-term higher low, and then we got this switch zone here, started to break the downtrend line, moving above the average, and then we had a confirmation here of a new high here, which gave us our signal. And so since then, Westpac really has, from those lows of $20, it's really moving on $40 again, which is the old highs, amazingly enough. So it's done that in about 18 months, so which is pretty good. One big trend, a sideways pattern for a few months. Now we're breaking higher again in no uncertain terms. So we've gone with this one as we have with ANZ. And I think NAB will follow this one as well. So Westpac, trend intensity rating of 10, and it's shooting for those highs at about $40. An interesting situation always. Those points that we watch very carefully, old highs, and could well bring on a trend change. We've had a huge rally in Westpac for a while. It may go through, and there may be a new golden era ahead. So we don't really know. But anyway, that's Westpac for the moment. Very interesting, and it is amazing what some of these banks how much they've gained the last couple of weeks. CBA has gone with it, but not to that extent. So the other banks are really taking over the mantle at the moment. Okay, so that's the banks. Again, a bit like Medibank Private, the trend is your friend. Qantas, well, it just seems to take everything in its stride. All the bad news just seems to send the stock higher. The basic thing about this stock is it's making money, and so all the news and stuff really doesn't matter that much. Even $90 million doesn't seem to matter that much to Qantas. In the scheme of things, the stock is going higher, and we just follow this with our trend. We've had one good trend, we've got stopped out. We've had another trend here which we've got onto just above $10. It's now nearly $11.50. It is $11.50, so it's moving ahead very well, and a nice little profit for us to protect there. Okay, so that's again, try not to read too many newspapers about things like that. Follow the price. The price will always be your best guide as far as what a stock is going to do. And it's a very simple thing to do. It's one price, one thing to analyse, one thing to look at, and things I say like new highs, simple trend reversals, those sort of setups are very easy. You don't need a lot of them. You don't need to cover everything. Just a couple of simple setups and some discipline to follow those setups and that trade plan will see you through very well. So that's Qantas. So that's been a good one there for us. Again, Sandfire Resources, which has been a tough one for quite a while. Certainly since sort of late 2024, it's really struggled. Sort of below $12, $11.50 there. It keeps trying to make new highs and can't get through. It's having another attempt now. We've got some reasonable volume. Momentum's not bad, but again, because of our trade plan, we will go with this one. See what's happening. The trend intensity rating is rating at 10 at the moment. So who knows? Eventually, you've really got this underlying support coming through here, higher. And so that, to me, is showing there is pent-up demand, but these sellers are not going away with this one. So it's a matter of at some stage they probably will give up and we'll get a good rally in prices. But for the moment, it's been a bit of a struggle. Anyway, but it is making new highs at the moment, so we're following that one. Okay, I mentioned to you Orica before. It's been a really powerful run since March this year. It's gone from $15, it's now $22. So that's $7. That's nearly 30%. A good rise in Orica. Was a very dog stock for quite some time, but it's rating trend intensity rating of 10. Volume's good. If I squeeze this little big selling thing up there, you can see how good this volume is here. It's been very strong pushing this rise, and momentum has been very solid. So all those indicators there are flashing green. And so who knows where we're going to go to with Orica. I'm not even too sure where the highs are here. Okay, they're up at $24 where we're looking for as our next resistance. Okay, so that's Orica, and again, it's a simple new high, and volume, momentum, all those things that trigger our trend intensity rating. Okay, then we just go, I didn't mention this one before, Metcash. Surprisingly, it always sort of flies under the radar, this stock, or gets swallowed up between things like Coles and Woolworths. And the Coles and Woolworths story is quite interesting because Coles has been going very well for a long time. Woolworths hasn't. Tide may be turning a bit as Coles tend to stop a little bit now, and now Woolworths may be starting to gain a little bit. But in the middle of all this, we've got Metcash. Now, all of a sudden, it's jumped from $3 to above $4 in a matter of a couple of months, since March, April. And it's been a very solid rise, a very good volume, very good momentum, above the average. So we've got our sort of a downtrend line here. Let's have a look around there. We've got an average here, then we get a resistance level up here. But it's been a very good turnaround, this one for Metcash. Very strong indeed. So again, we just follow this one with our stop. And the next high is up around 480, next resistance level there. Okay, so that's most of the stocks I've got for you today. I want one other little one which I'm following before, a few times before, and I just wanted to show you this one, Southern Cross Electrical. It does yield a little bit. We had a big trend here back to 2023, 2024. Then we've had a big sideways action there, and again, this is a fairly simple one really. Just looking at the volume here, we've got the breakout of this sideways action, which has been in for about a year. It's moving higher on excellent volume. It's above the average. Momentum is now starting to tick higher and looks very interesting. This is a break to new high. So again, if it's in your group of stocks, all you do is you buy this with a stop, and that's just another little one that I've looked at. But I think it's quite a good performer. This one's working in quite an interesting space, and it's certainly worth looking at, I think, for you guys. Okay, so that's most of the stocks I've got today. As I said, there's a vast array of other stocks going well. We know about the ones that have had a bad time. The Lottery Corp's an interesting one. All of a sudden, I've followed this one quite a lot with you over the last few months, and it's now finally breaking higher very, very sharply this week, which looks good. And there's two other stocks I've got at the moment. One is a communication stock, a big communication stock, which has been floundering for a long time, is now starting to move ahead. And another big health stock, which is another one which has also been floundering for a while, is now starting to move ahead nicely. And I think we might get a break this week. So have a look at the trading centre, have a look at those ones there. And there are lots of other stocks in there in the neutral zone, moving to the trending zone. Lots of stocks looking to break out. So just be careful. Try and keep your portfolio contained to a certain group of stocks. As long as they're working for you, it doesn't matter how many stocks you've got. As you know, I only run a 5-stock portfolio, which is my best performer. I only need 5 stocks. If they're all performing well, or 4 out of 5 are performing well, as they are at the moment, then you're going to make a lot of money. You don't need 10, 20 or 30 stocks in a portfolio. It's harder to manage and harder to monitor. Okay, so that's the stocks I got for you this week. A good mix of stocks, as I said before. Now, I just want to go through the slides today. It's a fairly brief one today. Just really reiterating the fact that these markets can really breed complacency. They can breed recklessness. We've just got to be so careful, because it is a matter of just buying a stock and it goes up at the moment if you know what you're doing. So be vigilant always. Complacency kills the golden goose. So just make sure that you've got all your positions monitored. You know where your stops are. You know when you're going to get out, and you know when you're going to get in. So make sure you monitor every week, as I do. Check. Review your stops, always adjust if needed to, always prepare for the adverse case. In the back of my mind is always the fact that this market could correct next week or tomorrow. Okay, so I'm always making sure that if I think that way, I'm making sure my stocks that I'm in are protected really well, because it's so important that we do that, because you don't want to get caught out, and you don't want to be in a situation where, well, the market's gone so well, we can wear a small loss, and we can wear another week down, and all of a sudden you lose everything. So just make sure that you keep a turnover of your stocks, make sure your stops are working properly, and your entries are working properly. So stick to or follow your plan, which is what I do, and it's probably working quite well for you right now, which it should be if it's a good trading plan. But it also should be a trading plan that tells you when you need to protect yourself. Okay, so a very important side of trading, and that's the easy part is the buying, the hard part is the selling. Okay, so there's my disclaimer for you to have a look at. And again, as I said before, new highs across all sectors. Protect those profits, minimise those losses. Always, it's the name of the game. Simple and basic. That's it in a nutshell. Okay. So in all markets, accepting the other possibility is always a good reality check, because what we do know is that sooner or later it will happen. It does happen. So nothing good goes on forever, but sometimes we trick ourselves into thinking it will. So being aware and accepting is a good way to be. It prevents disappointment and enhances and makes the whole trading experience more enjoyable, which it should be enjoyable. And as I said before, the market spends most of its time going up, so you should be enjoying it most of the time. It's those difficult times when markets aren't going up, and sometimes it can happen for a year or two, but you just need to work through those things and make sure you're not losing your money. Well prepared for when the market does rise, because that's what it spends most of its time doing. Okay, so that's all I've got for you today. I hope you enjoyed that. I hope you're all making some money and enjoying the stock market at the moment. Watch your trends, hedge your stops, keep it simple, have fun, stay safe, and I will see you all next week. Thank you.